Happy weekend, Lynda. How are you doing today?
I'm good. How are you?
Good, good, good. We are, what is this, October 13th. We got 2 more days till tax deadline, right?
Yeah, 2017 or else.
Yeah. And then more important, we've got QuickBooks Connect coming up pretty soon. I'm excited about that. So
we're very excited about that. We're going to have fun.
Anybody that ends up at QuickBooks Connect, be sure to find us. We're going to be out there actually trying to meet people. We want to hear some stories from different business owners, different accountants, and anybody that wants to share their story within the community. That's what it's all about for us. So we'll be up there having some fun with that. But today, it seems like we get a lot of challenges and a lot of questions all focused around the age-old difficulty of undeposited funds, right?
Biggest question. Usually it comes about maybe February when the accountant looks at the file and says, what is this? And you're like, I have no clue what that account is for. What does it mean?
And so part of the reason for that is undeposited funds. So the undeposited account, basically, I guess we should kind of start by explaining that part of it, right? Mm-hmm. Whenever you're doing deposits, you receive a payment from a customer, you want to take that payment and instead of depositing it directly into your checking account, it should go into your undeposited funds account first. And the reason for that is, let's say that day you get 2 or 3 different checks from different customers throughout the day. And then when you go to the bank to deposit them, do you make an individual deposit slip for each and every single one of those? Most likely not, right? I don't know many people that do that.
I have a client that does that actually.
Okay, well, they can deposit directly to the bank account then.
Imagine the teller must see that person come in and go, oh God, here comes so-and-so.
Going on break.
But you know, my analogy with the undeposited funds is it's your desk drawer. You open the mail for the desk drawer and there you go. And you put them all together and let them go.
So what happens is when you receive a payment, I'm going to very impromptu here, come in, we'll go receive payment for whatever it is you're receiving payment for, right? Mm-hmm. If you've got an outstanding bill, which of course I chose the wrong person here, where I was going with this is you'd have your payment method. If, again, cash check, even if it's credit card, you could have your credit card company, they could batch, well, they're going to batch the transactions together, right? Yep. So by putting it all in, having go to undeposited funds, what that does is when you're done with that payment, pretend I put a payment in, I'm going to come up and let's go do a bank deposit because now we're going to take all those checks that we actually had and we're going to run them over to the bank. Mm-hmm. That makes it to where we've got one we're going to deal with today. Let's say that Gail, George, and Mary all paid us on the exact same day. If you do each one as you're putting them in, put it to undeposited funds, you then go to your bank deposit, you click those off, and it's going to show you the total amount of your deposit, which should be matching to your deposit slip. Now,
right, makes your reconciliation much easier.
Bank feeds. If you're going to be putting stuff in and you're going to use bank feeds, your job is to try to get as many matches as you possibly can. The person with the most matches wins. Mm-hmm. 1-to-1 ratio matches, I should say.
Right. Match, not enter, which is what happens when you get a problem with undeposited funds.
Exactly. So you can even come in, print deposit slip and summary, and you could take that with you. So when you're filling out for the bank, everything else, you know exactly what it was. But the premise, like you just said, is this should actually match to the penny what you're depositing into the bank. So what happens? What do people do wrong, Lynda? Where does this kind of like go bad?
Usually they enter the customer payment and they just put it into the bank, the checking directly. So these 3 checks went together, they went in separately. And then when they go to do the banking, the bank feed comes in with the total and it doesn't match up to the individual transaction. So then they go, oh, I know I put that in the bank. And then they go, I sold product to that person, and they go put it into product sales. Now what do you have?
You have double your income.
Mm-hmm. And then at the end of the year, they're like, wait a minute, I have that much profit? I didn't sell that many things. And then it's like, okay,
which
there it
means you
is.
pay a lot more money to taxes.
You overpay. Yeah.
Wouldn't be. So,
that.
so to kind of reiterate, kind of one of the ways that happens is if you're receiving payments for a customer, and if you put it straight to the checking account, not to undeposited funds, that makes it show up as an entry inside of your checking account. And then when the bank fee comes in, right, if you had multiple parts that made up one deposit, they're not going to match. So now you add that also to your bank account. It shows as double income that way, which if you're reconciling your accounts every month, you would catch much sooner. But a lot of people kind of push that part off because it's not very fun.
Or they ignore it and have this giant list in the bank rec that's not cleared, and they don't know what to do with it because it just sits there.
So the other version of this is if you deposit all of the individual items, or I'm sorry, you take the payments and put everything into undeposited funds, but you never actually create the bank deposits that take the pieces that then go into the bank, and you then just have the bank fee come in and you just accept those in that way. When it'll reconcile, great, right? But you've just doubled your income again because you did the sale by receiving the payment, doing all that type of stuff on cash basis. But now your undeposited funds is increasing because, like you said, when that money came in from the bank feed, you have to assign it to some account, which most people would put to sales or labor or revenue or whatever. So the only way to bring that back down is you either have to go deposit by deposit and match up the actual items that were in there and kind of like removing the wrong account.
Yeah, show them, do one.
Okay. So if we've got a couple here, like right now we've got 1800, George and Mary, right? Mm-hmm. I'm going to duplicate my tab here so we can keep that open to come back to.
Cool trick.
I'm going to exit out, and I could click here, and hopefully the 1800 is one of the very last ones by showing a listing of stuff. Mm-hmm. But you can also type in, if you're looking for dollar amount, put the 0.00. If you don't, it's going to be tough. You'll end up having to go to advanced searching. So here's George, right? Mm-hmm. We've got George's invoice for $1,800. We have his payment. Let's look at that one. So this payment went to undeposited funds. Mm-hmm. Perfect. This is beautiful, right? What we would need to see is if we wanted to deposit this to the bank, it should go in, bank deposit. We would pretend we did, well, let's see, what was George's date? So 1/17. So let's pretend the deposit was actually done January 18th. And we knew it was going to be just that one item that was deposited. I'd come in, I'd click it. You'd see my total is the 1,800. At the very, very top, we see the account we're going to be going into. And we would hit save and close, right? Mm-hmm. So that would be a proper deposit. If we look at a bank feed and we found money that came in, we would have to have, let's see if we're going to have a bank deposit that way. If we had a bank feed item that came in, which we haven't created because we can't kind of create the bank feed coming into it, we would show an $1,800 charge that would come in.
And it would match like that green one.
Match to it. Like, so I guess we could actually use Gale here, right? Is this one of the ones you did?
Yeah.
Oh, perfect.
Well, it's one of the, it's matching up to the payment. Yeah. But I have a deposit now. I have a deposit in there, and then I also have a deposit. So yeah, but that would be a match.
So here, if this, let's say this wasn't matched and it was just added in, right?
Right.
Now we're talking about a situation where if we had sale of product income and this comes in, boom, we just doubled our income because we didn't match what was actually there waiting to be deposited through the bank deposit area.
Right.
Right? So
Right, is Gail. She's not there. So that's the actual payment on the invoice, and it's not added to the deposit because you just put it in straight to income. And the invoice is where it shows the income at the item level. So, and obviously cash basis would be the payment. So yeah,
Yep.
So now that needs to be put in that other place that you just entered.
correct. Because if I went in and just did deposit there, it'd be doubled up. So the way I usually go about this, you might have another way to go about it, is we go through every month and we kind of reconcile this stuff.
Mm-hmm.
You could, if you're trying to find the items, you can pull up a deposit detail report. And you can see all the deposits for that given period of time.
Mm-hmm.
So let's go 117 through 120. Run report.
She might have been earlier.
There it is.
Mm-hmm.
Okay. So, of course, we could have done the search for the amount. If we look on this one, see how at the bottom, we've got the information now at the bottom here.
Mm-hmm.
This is a good way to notice that it's going to be duplicated, because if we find Gail at the top here, we can click this off. Our amount's doubled, but now if we delete this because it's not right, save and close, we will have put the connection back correctly without breaking any bank reconciliations that had possibly been done previously.
Which is good.
So now we would not have the revenue double stated, and we will have corrected that challenge.
So now how would you handle if somebody, like I had a client that had like 250 pages of undeposited funds, which you've got a pretty good list. How would you handle, you found out that you went through the file and you now found out that this was what was happening, that this person was just putting it all into sales, a product. How would you get rid of that list and get rid of all of those hanging transactions easier than going through every single one, because there's just so many that you just didn't want to go through? How would you fix that?
So the first thing I'd have to do is I'd have to pull up a profit and loss for we would want to choose a given period of time. You're going to end up making some adjustments, basically, is the short version of this. Some people will say you could do it once a year. If you're trying to get any kind of valuable data out of your information, we would actually do this on at least a monthly basis. You know, again, choose your given period of time, and then you need to run a profit and loss for the period of time to try to find out what accounts were inaccurately given credit, right? So in that situation we just had, it was sales of product that was overstated. And what we would need to do is do an adjusting entry that would take the amount for the period of time, reduce your sales of product against your undeposited funds, so they basically wash each other out and go away.
You want to show them January if you wanted to do 1 month? I mean, I know you're using a dummy file that really doesn't have, it's not effective, but you can go to the bank, +sign bank deposit and grab whatever in one specific month, and then show the minus amount to show them how to do it, because I think a lot of people get tripped up on the word minus.
Yeah. So if we've got January, we're basically saying that we're going to take, let's go 2015. My goodness, this is a bad company.
It's a testing ground.
Exactly.
Use September of 18, because you got 3 or 4 down there at the bottom.
Exactly. Well, how about right here?
Oh yeah, there you go.
So we've got all of these ones, right? For September, we've got a total here of 54,551.25. What we're assuming at the moment is, let's assume that we knew sale of product is what they chose every single time, right?
Right. That's key. You got to make sure you have the right account. But yeah, you don't want to adjust out the wrong account. But just most of the time, it is one account with people. When I've seen it, it's been my experience.
Exactly. So we would put in sale of product. You should, in the description, you should put some kind of notes.
Yeah. Because 5 years from now, if you're ever audited, or 3 years from now, if you're ever audited, you want to know why you did this.
Payment method, reference number, and then
Yeah, minus 54.
so
And then obviously you would date it 9/17 or whatever, and that would be it. Zero. And then make sure the other thing, when people do this too, sometimes if they do all these zero transactions to adjust stuff out, and then they never reconcile them, and they just sit in the reconciliation. It's like, it's zero, just click it. I know it didn't have a bank feed match, but click that to clear it out. But yeah.
I would always put it the last day of the month, since you're doing the whole month. Okay.
Yep.
Come in, save, and you've got your details. Copy this, put it here as well. If you've got supporting documents on anything like this, you should attach it as well. Don't count on your memory. It's not going to be as good as you want it to be when you need it. Save and close. And then again, this is a sample company file, but if we were to come in and we wanted to do our reconciliation, right? We would come in and go reconcile. That was vendor sync, I believe. And we're going to just quickly show you that that item is in there. So I'm going to go ending balance 0, and we'll put the date of 9/30/2017.
And there should be a transaction for 0 in there, which there it is. You can click and reconcile it. I hate those pop-ups. I don't know about you. Hate those.
Yes. No comment.
Yeah. That's it.
So you would reconcile by clicking this. It's basically clearing out that last transaction part, and it kind of completes the whole cycle of the process.
Yep. So, and then you're cleared out, and you can clear out your undeposited funds month by month. This is like not the preferred method. The preferred method is going into each deposit and actually doing what you showed the first time, taking it and then trash canning that line item to sales. But if it's overwhelming and you need to clean it out, this is an optional method that basically does the same thing. But it's, if you have no way to know what was in each deposit, you should. But
it gets hard because sometimes if you've got like Stripe or Square, yes, you can get reports and you can find out what the merchant processing amount is. But when you've got a sale for 200 and then all of a sudden the deposits for 192 and 64 cents, it's like, what do I do?
It's a lot of work.
So hopefully this kind of showed the different ways to deal with undeposited funds. We can try to set up a full longer explanation than this, but hopefully going through some of the details of why it's important is helpful and helps answer some questions. So
yeah, I think this is a good one because this is something I see a lot, and I'm sure you do too.
Oh yeah,
it's almost that season.
Then Lynda, here's wishing you a very, very successful week, and we hope to see everybody up at QuickBooks Connect.
Yes, absolutely. And hopefully we can, if you're not going, follow us and you'll find us and see what it's like to go there.
Yeah, we're going to be doing some live streaming stuff. Again, hopefully some interviews, both of business owners, accountants, and a couple software developers we got planned. So guys, have a very successful week. Thanks.